Crimes banks commit on every loan. Part 2. Fraud, forgery, intent to deceive. Altering a signed document after the fact with the intention of changing the document's value constitutes forgery and fraud. Forgery is the process of making or adapting objects or documents with the intent to deceive. Fraud is any crime or civil wrong perpetuated for personal gain that utilizes the practice of deception as its principal method. In criminal law, fraud is the crime or offense of deliberately deceiving another to damage them, usually to obtain property or services without compensation. This practice may also be referred to as theft by deception, larceny by trick, larceny by fraud and deception, or something similar. When the bank altered your signed application by stamping the back of it with "pay $10,000 to the order of," the act of stamping it, forgery, turned it into a promissory note worth $10,000, which is fraud as it changed the document's value. They then deposit it at the Federal Reserve, where they bank, and the FRS returns $10,000 to them, in which they deposit into a transaction account under your name as if you deposited cash. It is your asset, because it is your promise to repay. It is your credit. So they've stolen your promissory note, which has a value of $10,000, times the reserve amount, which is now infinite, to them. They obviously intended to deceive you, as you would never have given them a $10,000 asset, then borrow the same amount back from them and pay interest and fees.